What's going on, guys? It's Andy here. Welcome back to another episode on the Andy Kandola Show. Alright, so I'm excited for this video. I'm going to share with you guys the top 5 dividend stocks that I'm investing in right now. Now, when I talk about investing, there's multiple ways to invest, but I believe these 5 dividend stocks are the best investments long term. Plus, these companies have a bit safer dividends compared to the other companies in the stock market. I'm very bullish on all 5 of these companies, and guys, I believe with inflation at all-time highs, investing in dividend stocks is one of the best ways to get the best return for your money, because with inflation, you got to make at least about 5% to go ahead and just keep up with the inflation rates. And I believe these stocks and investing in dividend-based stocks is the best way to keep up with inflation and to beat inflation at the end of the day. So excited to go ahead and share that with you guys. But before we do, let me go ahead and give you guys an update on my portfolio. This is the bucket list portfolio. My goal is to get this portfolio to above $250,000 before the end of the year. And guys, if you want to follow me on this journey, the ultimate goal is to get this portfolio above $1 million. The current value of the portfolio is sitting at $141,000. We are down in the last day. The market has been going down, so we're down about $1,165 or about 0.82%. In the last week, we're down $1,125 or 0.79%. In the last month, we're up $6,823 or about 5%. In the last quarter, we're up $671 or 0.51%. In the last 1 year, we are up $12,889 or about 15%. And then all time, we are up $15,805 or about 22.84%. But here's the nicest thing about investing in dividend stocks. So far in this portfolio, I have earned about $1,696 in this portfolio just in dividends. So whether the stock prices go up or down, I'm still earning dividends from these companies. Now, I am making another deposit in my account for $3,000, so I am going to be dollar cost averaging into these 5 stocks that I'm going to go ahead and share with you guys in this video. But I will tell you guys right now, I believe it is the best time to invest in dividend stocks because of the growth potential, plus because you're accumulating those dividends over time. Now, let's go ahead and jump into the first stock. The first stock on this list is going to be one of my favorite stocks. This is going to be with Costco Wholesale Corporation. Costco is a wholesale distributor. They have brick and mortar locations all around the US. They are the most price competitive company out there when it comes down to buying groceries or buying any goods. If you go ahead and compare them to Sam's Club, to BJ's, or to some of their other competitors, Costco, hands down, has the best pricing. Plus, their employees love them as well. So this company is really focused on their customers and focused on their employees. Love this company. Hands down, I believe this is one of the best companies out there for a long-term investor. In my portfolio, the current value of Costco is $3,506. All time, I'm up about $572 or about 33%. And if we look at the chart here, guys, Costco has taken some dips here and there, but overall, this is exactly the type of chart that I like to go ahead and see. Now, as far as Costco's current stock price, Costco's trading at $411 currently. In the last 1 year, they're up about 26%. In the last 5 years, they're up 147%. Last 10 years, they're up about 415%. When I see a stock that's consistently growing like this, that's a good sign. That's something that I go ahead and look for. Now, additionally, with this company, they pay out a nice dividend as well. As far as their dividend yield goes, it is 0.77%. As far as their annual payout for their dividends, it's about $3.16. And this company's consistently been paying out their dividends for the last 5 years. But the best part about this company is if we go ahead and look at some of the data as far as the revenues of this company goes, we can tell right here, year over year, this company's net sales are going up as well as their membership fees. If we look here, there's more and more members every single year. So they're getting more members and getting more out of their membership fees every single year. So I really like that because this company's revenue is just climbing. As well as, guys, if we go ahead and look at their operating income and their gross profits, if I just show you guys their gross profits every single year from the last 5 years, from 2016, 17, 18, 19 to 2020, every single year, this company has an increase in their gross profits. And currently, as of 2020, they had a total gross profit of $21.82 billion. This company is doing extremely well, as well as their net income. Their net income at the end of the day, after paying all their expenses, is over $4 billion in 2020. This is the company that I'm extremely bullish on because with charts like this company is slowly and steadily growing. So this is going to be the first company in this portfolio that I personally really like. Now let's go ahead and jump into the second company. Now this is going to be another company in consumer staples in my portfolio, and this is going to be with Cisco Corporation. Now Cisco Corporation, my current value is sitting at $3,169. I'm up $395 in this company, or about 28%. I've earned about $61 in dividends in this company. Cisco Corporation is one of the largest distributors for the hospitality and restaurant industry. As we're getting out of this pandemic, restaurants are on a boom right now because there's a lot of money out there that the government is supplying through all the stimulus that the government has, and people have extra income to go out and eat. So I believe restaurants are going to do extremely well. And at the end of the day, with a company like Cisco that distributes and is one of the biggest distributors for the restaurant industry, as far as when it comes down to food products or when it comes down to any type of consumer products really for that industry, they're the leader. So I believe this company is going to do extremely well. Now just looking at Cisco's stock price, Cisco's currently trading at $72.59. If you look at the last 1 year, they're up about 30%. And in the last 5 years, of course, this company really took a hit with the pandemic. I started investing in this company right around when it was about $35, and now they're trading at right around $72. Plus, they're up about 40% in the last 5 years. In the last 10 years, this company was slowly growing, and they climbed right back to where they were pre-pandemic, and they're up about 134%. But the nice thing that I like about this company is their dividends. This company has consistently been paying out their dividends. They're currently paying a dividend of 2.59%, or $1.88 a share, and they've been consistently growing their dividends by 8.15% over the last 5 years, and they've been consistently paying their dividends and growing their dividends for the last 24 years. So they are on the verge of being a dividend aristocrat once they get to 25 years. So I am pretty excited about investing in this company because this is a long-term, safer play, in my opinion, that's consistently going to keep on paying out dividends. Now, additionally, if we look at this company and we look at their revenue, this company's had pretty consistent revenue. In the last quarter after the pandemic, they've consistently had a nice stream of revenue coming in. So I'm very bullish on this company. This company is another one that I believe is just a long-term play for a bit safer of a dividend. Now we're going to jump into the next stock. And the next stock on this list is going to be a company that's one of the highest conviction companies, in my opinion, in my portfolio, and that's going to be with Apple. Apple is a technology company that is second to none. They have one of the strongest ecosystems with all the different devices that they have, including the iPhone, including the Apple Watch, including their iPad, their MacBook. I mean, they have so many different devices that just suck you into their ecosystem. My current value in this company is at $20,429. I'm up about 78% in this company, or $5,684. And I've earned about $76 in dividends. Now, Apple is currently trading at $148 a share. In the last 1 year, they're up about 51%. In the last 5 years, they're up about 500%. Last 10 years are up over 1,000%. This company's ecosystem is just getting stronger and stronger every single year. And with a lot of secret projects that Apple's working on, which there's been rumors that Apple is working on an electric vehicle and a full self-driving vehicle that's going to compete with Tesla. We'll see if that happens, because Apple is very hush-hush about the different projects that they work on, because when they release these projects, they like to go ahead and attack the market and become one of the biggest players in them. So we'll see if that happens. And then additionally, I have heard that Apple is also working on the Apple glasses, which are basically going to be virtual glasses with Apple. So let's see if those projects do go ahead and come out. But at the end of the day, Apple is coming out with their iPhone 13 as well. And that's going to go ahead and get more people to spend more money with Apple. Now, as far as the dividend summary goes, Apple has a dividend yield of 0.59%, or they have an annual payout of about 88 cents. Now, Apple recently just started paying out their dividends. So they've been consistently paying their dividends since they started. So 8 years ago, they started paying their dividends, and they've been consistently growing their dividends and paying their dividends since then. Now, if we look at Apple's returns, Apple has some solid revenue coming in from iPhone, from their Mac, from the iPad, from their services as well. If we just go ahead and look at their iPhone, they've consistently had great revenues from their iPhone. If we go ahead and look at their iPad, same thing, they've had consistent revenue from their iPad as well as their Mac. Plus their services, guys, they're really focused on growing their services. If we look here, this is one of their biggest growth potentials, and I believe this is just going to keep on growing because Apple's really trying to bundle and have a subscription model, and that's really what they're focused around these services. So I really like this about Apple is they're focused on a lot of revenue coming in. At the end of the day, every single year, they have $274 billion in revenue. As far as the gross profit goes, their gross profits are very consistent. Just in 2020, they had over $100 billion in gross profit. And as far as their net income goes, they had over $57 billion in their pocket as net income. I mean, these numbers are just next level. So really, really strong company here. And now let's go ahead and jump into the fourth one. We are gonna stay in the technology sector, and this is gonna be with Nvidia. Now, Nvidia is one of the biggest semiconductor company out there. They basically make chips for all different industries, for data centers, for the gaming industry, for the car industry. So this is one of the biggest companies, and with a shortage of chips, guess what? This company is in high demand. They are the largest company when it comes down to making chips. In my portfolio, Nvidia's current value is sitting at $6,519. I am up $2,328 in this company, or about 93%. Now, Nvidia pays a smaller dividend, but this is a long-term play for me. So as far as the current dividend goes, I have earned about $4 in their dividend. Now, just looking at Nvidia's stock price and their stock trend, Nvidia is currently trading at $758 per share. In the last day, they're down a little bit, but if we look here, guys, in the last 1 year, they're up about 85%. In the last 5 years, they're up over 1,300%. In the last 10 years, they're up over 5,000%. With the shortage in chips, this company has a great potential to go ahead and grow. They're making chips for literally every single industry out there that's currently growing, and I don't see this company stopping anytime soon. As well as when we look at their dividend, Nvidia is paying a smaller dividend, but at the end of the day, it's nice that this company still pays out a dividend. Their dividend yield is 0.08%. As far as the annual payout, it's 64 cents. And as far as their dividend growth goes, they've been growing their dividends by 7.6% every single year. Now, if we look at some of the good things about this company when it comes down to revenues, here are the different industries that Nvidia is focused on. They're focused on the gaming industry, they're focused on professional visualization, they're focused on data centers, and they're focused on the auto industry, and they're focused on OPM, or intellectual property. Now, as far as just breaking this down, if we just look at just data centers, look at what's going on here. In the last 1 year, they have a revenue of $6.69 billion in just data centers. If we look at gaming, just in gaming, they've also grown. They have a revenue of over $7.75 billion in just gaming. If we look at the auto industry, look at this. I mean, they're consistently growing in every single thing. There's been a shortage of chips, or I believe this chart would be even higher. So in the auto industry, I believe they're still going to go ahead and keep on growing. But overall, guys, as far as their total revenue goes, Nvidia has over $16 billion in overall revenue. Along with that, if we go ahead and look at their gross profits, they have over $10 billion in gross profit. And as far as their net income goes, they have over $4 billion that they've earned in their pocket at the end of the day. So very strong company with a very strong future ahead. Now, jumping into the final one is going to be Store Capital. Now, Store Capital is going to be jumping into real estate. They're one of the largest companies out there when it comes down to being a landlord that has mid-size to larger tenants. Basically, with this company, they're one of the largest companies that owns a lot of real estate all around the US, and they focus on getting mid-sized tenants in there, or they focus on getting larger tenants in there, and they have long-term leases that are basically triple net leases. So once they go ahead and buy the property, do their initial setup on these properties, or do their initial renovations on these properties, they're able to go ahead and rent these out, and out of pocket, they have no expenses because they're triple net leases. Now, as far as the current value in my portfolio, I have a current value of $4,529 in Store Capital, and I'm up $975, or about 34%. Plus, this company pays out a decent dividend, so I have made $138 in dividends. With Store Capital, the current value is $36 a share. In the last 1 year, they're up 60%. In the last 5 years, they're up about 22%. And then all time, I believe this company just went public in the last, I think, 6 or 7 years here. So we don't have data for the last 10 years. Now, Warren Buffett is a huge investor, and I believe he owns over 10% of store capital as well. As far as their dividend goes, they're paying a dividend of 4%. That's a pretty nice dividend. Now, as far as the annual payout goes, they're paying $1.44 per share, and they've been growing their dividends in the last 5 years by about 6%, and they've consistently been growing their dividends for the last 6 years. Now, if we look at their charts, their revenue has been very consistent. Because they're a landlord, even with the pandemic, they've been able to hold down their revenue pretty consistently. Just in this last quarter, Q1, they had a revenue of $182 million. Now, as far as net income, pre-pandemic, they were doing extremely well. With the pandemic, they took a minor hit, but guys, at this point, I believe they're going to be able to go ahead and slowly increase their net income. In the last quarter, they had a net income of $54 million. So another company that I believe is a great company to go ahead and diversify yourself in within the real estate sector. But guys, these are basically going to be the 5 companies that I'm pretty heavily investing into right now that I like, that focus on dividends but also have the potential to grow. Now, I have my portfolio broken up into different S&P 500 sectors. Altogether, there's 11 different sectors, and I like to go ahead and break it down into the sectors that I like to go ahead and invest in. I invest in all these sectors and focus on dividend stocks, as well as I do focus on growth stocks as well. So I have this portfolio split up where I allocate to this portfolio and dollar cost average into this every single week. Now, if you want to go ahead and keep up with this portfolio and what I'm doing with it every single week, I like to go ahead and share with you guys where the portfolio is at and basically talk about all my different investments that I'm investing for that month or that week. So don't forget to subscribe to the channel down below. Now, if you are interested in trading with M1 Finance, gotta throw it out there. They do have a limited time offer, but they're currently offering $30. Don't know how long this is gonna last, but if you guys want to check it out, I'll leave a link down in the description below. But thank you guys for watching. Until next time, I will see you guys at the next one.